unfortunately, this past summer, the United States took another major blow that's going to make it harder for U.S. companies to succeed, and it's going to make it a little bit harder for all of us. Let's talk about this. It's the U.S. petrodollar deals, and until June of 2024, oil, for the most part, in the national trade, traded in U.S. dollars. So how did that help us? How did that impact us? Well, the first thing is, it's a great thing that much of the world exchanges goods and services with each other in US dollars. But you know what? This chart here shows that since 2020, so about the last 25 years, the US share, the US dollar share of currency exchange has dropped from almost 75% down to below 60%. And that's a big deal. But let's talk about this latest blow and what it really is and what it means to us. First, what are what I call petrodollars? So petrodollars are high level. It means that oil traded in US dollars until this past summer. And this was a deal that was put in place in the mid-1970s. It was part of a larger deal, a landmark deal with Arab countries. This was not written down anywhere. This was just a handshake agreement as part of a larger deal. What does that mean for us? Let's first look at how these dollars work. So all countries need oil in order to run their economy. And so countries that have their own oil, like the US, we are actually a net exporter of oil at this point, which is a great thing. But most countries need to import oil. And when they do that in the past, they've mostly had to do that in US dollars, not entirely, but mostly in US dollars. So you can see here the barrel of oil. The oil exporting country is exporting a barrel of oil, and the oil importing country is paying for that in US dollars. And that's from wallstreetmojo.com, that nice graphic. And so why is that a good thing? Well, it's a good thing because the oil producing countries are rich in US dollars, and they have to do something with those US dollars. So in the past, they've been buying our treasuries, which is debt that the United States issues. And when they buy our treasuries, that keeps all of our interest rates lower, which is a good thing. We're all feeling the impact of higher interest rates. And then they're also investing in our stock market because they have US dollars, and we have the size of our stock market is big enough that they can invest hundreds of millions of dollars, in some cases billions of dollars, or maybe even trillions of dollars in the US stock market and not move the price of the individual stocks, the indexes, as much as they would in other places. It also helps prop up the value of real estate, commercial real estate, because these oil-rich countries are now dollar-rich, and because they're receiving dollars when they trade oil. And so they've been investing that in the U.S. Now that the U.S. dollar share has dropped from 75% to below 60%, now they have other currencies. And let's look at what those other currencies are. Before we get there, this is the dollar dominance. This is the share as a global payments currency. And you can see that the number has actually gone up, despite that the share for payments has actually gone down. So if you look at some of the other components, which is what we're going to look at here, this pie chart shows us what the currencies are. So again, the US dollar is about 60%. Other currencies are 8%. Our biggest competition is the euro. And then you can see China, which is the RMB. China is not that high, it's 3%, but I suspect that that's going to continue to go up. And then this is bulk of the US dollar reserves, where those are held. So we want that green bar to be as high as possible. We also want the blue bar to be as high as possible. We prefer that the purple bar, which is our government entity, the Federal Reserve, not be too large of a piece. So you can see right now the Federal Reserve is about 20%. Domestically, what is that? Probably 40-50%. And then the other 20 to 30% are foreign owners. So it's nice when foreign countries own U.S. currency, because essentially it's a debt-free loan to the United States if they're just holding the currency as opposed to a loan. Okay, and then this chart here shows The US dollar is what's overwhelmingly used for US trade, and this is by region of the world. So you can see here in the Americas, so this would be Canada, this would be Mexico, this would be Central America and South America. You can see it's like, what is that, 98% of the global trade is done in the US dollar. Asia Pacific, you can see it's down a little bit lower, but still almost 80%. And then you can see in Europe, obviously, you know, the euro is the thing that's used the most there. And the reason for that's why the euro was developed, was to compete with the dollar. So other countries have figured out the value of being the world's currency, and now we're competing with them. And then the rest of the world there, you can see we're right about 80%. Okay, let's keep going here. It's also the dominant currency in international banking. So you can see here, this is the international banking, the percent that the US dollar is used nationwide. And then this is an overall index. And this really shows, you know, what is the impact of all these changes that we've talked about over the last 25 years. So we've had the euro get introduced over the last 50 years. The euro was introduced. We've had the BRIC nation, Brazil, Russia, India, China, and other countries. We've had the BRIC nations compete with us as a currency. You can see despite that, though, the US dollar has really held up remarkably well. So is it good news that petroleum, that Saudi Arabia is now accepting currencies other than the US dollar to buy oil? Is that good news? It's not. Is it bad news? It is. Is it devastating news that's going to destroy your portfolio? I don't think so. It's not a good thing. It would be better if the whole world traded on the US dollar. That would be a great thing for us. Not so great for other countries, which is why we're seeing competition on this. But it's one of those things that just happens, right? In any space, it's a competitive space. We're gonna have some tailwinds, some things go in the US's favor, and we're gonna have some bumps in the road, just like anybody has, just like any business has, just like any country has. So we're in a great position. We continue to have to fight for that position. We have more competition coming on board. We hear a lot about the Chinese, but go back to that pie chart and you see the RMB, which is the Chinese currency, is less than 3% of the world trade. So they have a far way to go. I think the bigger competition, frankly, was when the euro came into being, because those are major markets. And frankly, I think while we're super friendly with European countries, they represent the US currency's bigger challenge. What should you and I do? It's just one more tea leaf in this pot of water that we're trying to figure out, you know, what makes sense, what risks are out there for us, what are the opportunities for us, and then having a long-term allocation that we can stick to in good times and bad times. None of what I'm sharing is financial advice. I don't know your situation. I do encourage you to work with a financial advisor on who knows your specific situation, that can give you advice tailored to you. I also encourage you to watch this video up here, where I talk about 8 things that I want you to think about stop doing in your 50s and 60s in order to enjoy your journey to retirement more, because it's about enjoying the youth of your senior years. So I'll see you in this video. Thanks for watching this one. Bye-bye.